On and Ankita believe that there are a lot of these updates that are coming in, especially from the financial space.
Absolutely. In fact, the private banks, they have posted rather lackluster numbers, the updates that are coming in, with weak updates coming in from IndusInd Bank, Bandhan Bank and RBL Bank. Meanwhile, the small finance banks struggle with muted deposit growth in the quarter gone by, largely due to the degrowth in the MFI loans. My colleague Gaurav is joining us with the highlights of these updates. Over to you, Gaurav.
Let's begin our list today with HDFC Bank, the biggest private sector bank. When we talk about the updates, loan book was a little lower than what the street was expecting. Although when we talk about deposit, there we saw an increase of around 16%, which was higher than the system growth. And at the same time, when we talk about CD ratio, that has gone down below that 100% mark. But at the same time, there are two things that were highlighted during the update. The first is that when we talk about corporate loans, that increased almost by 3% on a sequential basis in this quarter. And at the same time, when we talk about some bulk deposits and the deposit side, bulk deposit growth was higher than the CASA deposit, and that is the reason why analysts believe that there may be some kind of pressure in net interest margin, and as a result we are seeing some pressure in the stock price as well. Other than that, let's also focus on banks which are heavy on MFIs. So first let's talk about IndusInd Bank. When we look at the loan book and deposit growth, there we saw a weak set of numbers. Loan book increased almost only by 12%, while deposit growth was only at 11%. Other than that, we also have Bandhan Bank. There when we talk about the growth, that was lower than the street's expectation, and the key point here is that the collection efficiency has gone down for the bank. So collection efficiency, which stood at 98.2%, has now gone down to 97.6%, and that is the reason why we are seeing some kind of pressure in this counter as well. On the other hand, when we talk about RBL Bank, here we saw collection efficiency actually increase. So specifically when we talk about loan book growth, that was again a little lower than the street's expectation, but collection efficiency has gone up to 98.4% versus what it was at 97.5%. Now let's not forget that in the last 6 months only, this bank has gone down almost by 37%, and after this recovery, we are seeing some kind of recovery in the stock price as well. Lastly, let's also focus on some kind of small finance bank. We saw weak set of numbers there as well because of the slowdown in MFI, and specifically when we talk about AU Small Finance Bank. Now this bank is a candidate for universal banking, but when we look at the numbers, advances increased almost by 3.7% on a sequential basis, while deposit growth was slower at 2.3%, and as a result we are seeing some pressure in this counter as well. So definitely from the banking overall, we are seeing weak set of numbers in terms of loan book growth versus what it was expected, but definitely watching out on how the net interest margins and how the asset quality remains for banks in the quarter.
So much, Gaurav, for giving us a highlight of how the numbers have panned out within the financial space with respect to the Q3 updates we have till now. But let's also revisit Nikun's takes on the same. Listen in.
You have to look at every bank differently, right? You cannot compare AU and Bajaj Finance, and you cannot compare Bajaj Finance and HDFC Bank. For HDFC Bank, what matters to me is the deposit growth. It's very easy to get credit growth, very easy to get credit growth. In India, you can lend as much as you want, but can you get deposit growth? And for me, a 15% deposit growth, I think is a very impressive deposit growth, which in a sense has been the pain point for HDFC Bank. AU, well, we know that there is a bit of a contraction which they are going through, and of course they are not lending in the MFI business because of the acquisition they have done, and they want to take it very easy. IndusInd Bank is being pushed into a corner because of that MFI problem, and they genuinely are going through both a cyclical problem and a structural problem. All hopes of a comeback in IndusInd Bank clearly have been damaged after what they've indicated and declared for the quarter gone by. Then you come to Bajaj Finance, and I like those numbers. I like those numbers both in terms of the liability franchise, what they've created, and the growth, what they have initiated. So while we may argue back and say that, okay, is there a problem with banks in terms of growth? Well, you are going through a slowdown in the economy, and if you're going through a slowdown in the economy, obviously numbers will not be as heartening as what you actually anticipated. I mean, you had a print of less than 8% for less than 7% for the quarter gone by, which materially would have impacted the corporate loan book. That is what my understanding is. So I'm not making a case that these are rara set of numbers and we could be in for a big spike back into the banks, but for me, every bank really needs to be analyzed very, very differently, because Bandhan Bank is at a different bent and a different curve in terms of where the franchise is moving. And similar case, I think, is with RBL Bank. So if you look at advance growth for RBL Bank, 13% not bad, frankly, but the base is low. So I will not, get too much into it. But these are not terrible numbers. These are not bravo numbers. Will they keep these stocks stable? The answer to that could be yes, especially Bajaj and HDFC Bank. That's my view. And given what we saw from some of the retailers on Friday, it looks to me that it is not that bad, because if you look at consumer demand and weave it with credit demand, pretty much which way the economy has moved for the quarter gone by.
All right, that's the take coming in from my editor-in-chief Nikunj Dalmia on how the banks have performed. But let's get on board Gaurang Shah, the Senior Vice President of Geojit Financial Services, and Kunal Bothra joining us on the technicals. Hi, good morning to both of you. I'll come to you first. Gaurang, all the banks have posted their quarterly updates. Now, it's not a great set of numbers that we see coming in. I mean, if we look at, the numbers, it's mostly, the deposit growth has slowed down at this point of time, specifically for HDFC Bank. That has been a pain point for a while. Loan growth has also slowed down, and there is an overall slowdown that's going on, generally in the economy as well. When do you see the reversal coming in? When do you see the demand picking up, and specifically the deposit growth?
Thank you very much for having me on the show, and morning to all of you all. First, I think a prudent, to give you a disclosure over here, we have a target on HDFC Bank in excess of 1900 from a long-term point of view. Mobilization of deposits, liquidity, increasing the loan book, maintaining the margins and the NIMs, they have been challenging for some of the banks in the last 2 or 3 quarters. Our sense is that slowly the improvement is visible, because the mobilization that was reported for first and second quarter for some banks, and the mobilization of deposits that has been reported for the third quarter, there has been a not significant improvement, but a slight improvement. I think the entire banking sector is going through a little bit of maintaining of advances and deposits and maintaining of margins. If I have to look at the historical track record of HDFC Bank, then we have been maintaining a positive view. We have a buy recommendation, and we continue to do that as we go into the future. But this, you can't take 1-2 quarters of disappointment into consideration and take your decision to exit the stock. You also look at the history, and at the same time business commentary and the outlook for the future. So there are challenging times, there is no denying about it, but in terms of long term, we maintain our positive view.
You maintain the positive view on the financial space, but yes, indeed, there are some near-term challenges that Gaurang was just mentioning too. But Kunal, let me have your take on the technicals as well. A very good morning to you, first of all. For today, we are down and out because look at the move in Nifty Bank specifically. It's almost a 700 points of cut is what we are seeing right now. No major support from HDFC Bank, IndusInd, and all these financials are down. Any of the stock that you believe that could be still in for some more weakness, or will you also be a buyer at lower levels?
I would, probably want to stay a bit more cautious in the banking index, because I believe today's breakdown of sorts and the way many of these banking stocks have behaved over the last 3 months, 6 months, just about gives an indication that the sector health is still not at its best. Now, you would want to buy these stocks, when, the worst is behind, or you would want to buy these stocks when they are getting back into a zone where, the best could be starting off for many of these banking stocks on a, cumulative basis. So, but, this time around, it's a lot more staggered. You had HDFC Bank and ICICI Bank, the two prominent names, which were showing signs of strength, durability, as well as resilience, with respect to many of the other private sector banking names. But even these stocks have gone back into a corrective phase, and you already have, a slew of underperforming names, the likes of Bandhan Bank, AU Bank, IndusInd Bank, etc., which were as it is showing signs of a lot of struggle for themselves. So it just, adds on to the worst part for the banking index, and that's why I would believe that, till the time these the number of stocks which have been showing signs of underperformance, once those underperforming names, once those stocks, they don't start to get back into a recovery phase, I think it could be a bit more premature to try and buy into these banking names. So I would want to be a bit more cautious over here at current levels for the banking stocks.
All right, banking stocks not in the pink of health, and a little bit more caution as far as financial space is concerned. But with that, it's time for us to slip into
If you like this video, then like, share and subscribe to ET Now.